Well, good evening, everyone. Welcome back to the channel. So I wanted to do a video on Rivian and make the case for why it's more likely to go bankrupt than to 10x. Um, and while I was prepping for the video, I started to see the comments build up, and I said, wow, I just can probably get going now because a lot of you are commenting on some of the stuff that I was actually going to say. So we'll go ahead and get started on comments here. Recalls, inability to scale production due to super high interest on loans would say two of the main reasons why Rivian can't get profitable anytime soon. Sonia says, I've noticed that all new small car companies are shorted to death. Can't think of another category that is so heavily shorted constantly. Sad. As the saying goes, there's only one Tesla. Yeah, I agree with that. Rivian had been the main competitor. We're going to look at all that. We're going to look at the stock performance, the financials, and everything. Can invest in BYD with BYDDY, buddy, something like that symbol. Just a car company, I think it's easy to look at them fundamentally and figure out if they can ever meet profitability. Seems like a hard industry to survive in. Cost of batteries per kilowatt hour decreases every month, should reach the same cost to produce an ICE vehicle later this year. Okay, so I see some concerning things going around about, Rivian possibly taking off and stuff like that. And I just kind of wanted to level set. I've had some questions definitely from people, privately that have reached out to me asking about electric car companies. And so I figured I would do a video on this and look at the financials and see where we were actually likely to go. So let's go ahead and dive right in. And what you're going to notice is that on Yahoo Finance, I still have the last company I was looking up, MicroStrategies, because we have a brand new Yield Max fund today. And by the way, just so any new viewers know, this is not a Yield Max cult over here. We do talk a lot about Yield Max, but we're dividend investors. We're investors in general. So everyone's welcome here. We're not just like a Yield Max cult. I do hold Yield Max. I've interviewed the Yield Max fund manager 3 times, soon to be a fourth time. But just to clarify for any new viewers, it's going to be objective on here for sure. And all opinions are welcome. Okay, so Rivian dropped another 25.6% today, which is concerning because it's been dropping the last 2 days. It's been dropping from the 20, let's see, close of market here. We dropped from 15 here. Hold on. Where were we? We were at 1643. We dropped down into the 15s, and then we dropped down to something's not up to date here. This is showing 14 and then 13, but we're actually down to 11. That was okay as of today. I guess it wasn't reflecting today for whatever reason. So there we go. We've dropped all the way from 1665 all the way down to 11. So that's a $5 decrease. So from 1665 minus 5. That's a 30% drop in 2 days. Very alarming. Negative earnings per share, 1 year target estimate. I don't know how this is, but Yahoo's got it at 24.28. If we look since the stock debuted back in 2021, the stock debuted at $120 a share. The stock has fallen significantly from there. And this is one that's like when you have that basically L shape curve like this, the stock is a loser, basically. Hence the L shape. It's like an elongated L shape, but you see how it's like, you might call this like the inverse J curve. From from the first day of trading back in November 2021, it's been nothing but downhill. This stock isn't even worth like 10% of where it started. Actually, it's about 10% of where it started because 11 that would be 1197. So pretty concerning. Market cap 10 billion. As far as financials, what you're going to see is that this company is absolutely bleeding cash. Operating margin is also negative. You're going to see a lot of negative numbers here. And I don't mean for this video to be a downer, but it's just meant to be a presentation of the sobering reality, I guess. So let's see here. We got another person on. Welcome. Okay. So for So 2020, we have some financials here. 2021, we have our first full year. So revenue exploded in 2022. Trailing 12 months is also more than doubling over 2022. But again, we see that the costs of revenue far exceeded total revenue. So that's never a good thing. I mean, I don't know if I've ever seen anything this bad, actually. The costs just ran laps around the revenue. So there's no way a company can survive like this. And there's some breakouts into operating revenue. Let's go quarterly so that we can see the 2023 numbers. So we've got total revenue growing. Let me minimize this again, but we've got cost of revenue in every quarter far exceeding total revenue itself. Okay. So some of what we teach on this channel, we're going to go over some basic statement analysis 101. And this really isn't hard. What I'm showing you all, we're just looking at basic numbers here. Okay. If your costs exceed your revenue, you're not a profitable business. Okay. So we try to keep that simple. Gross profit, as you can see, negative every quarter for trailing 12 months, atrocious. Operating expense continues to increase and snowball. Operating income, negative and absolutely atrocious over 12 months. This honestly is one of the worst statements I've ever looked at in my career as a coach. Pre-tax income, we get a little bit of a tax provision here, but still abysmal. Earnings per share, all negative numbers. Uh, yeah, this is not pretty. Operating income, expenses. You see, expenses are like almost double operating income. Net income from continuing, uh, and so on. That's annoying. Continuing and discontinued operations. Don't know if they have any discontinued, but that's what the statement item says. Normalized income, and then we have some of these: interest expense, EBIT, EBITDA, reconciled cost of revenue, net income. You see the bottom line here, all negative, all in the black. I mean, sorry, in the red. The font happens to be black, but these are all negative numbers. So yeah, folks, this is one of the worst set of statements I've ever looked at. Balance sheet we'll look at quickly. That's just going to show your accounting stuff. Your assets should equal your liabilities plus shareholders' equity. Total capitalization should at least be positive. Common stock equity, and so on. Now let's have some more fun. Let's look at the cash flow statement. Ooh, lots of negative numbers. So we've got a snowballing negative operating cash flow. I mean, absolutely snowballing. You see that from year to year. Let's do quarterly so that we include 2023. So look at this. Every quarter, we've got negative operating cash flow, which is from continuing operating activities. Investing cash flow is what's this here? Oh, we've got a little bit of a breakout here. Working capital, stock-based compensation. Look at that. That's snowballing, even though they're losing money. Investing cash flow is also negative every quarter, with an abysmal second quarter of 2023. Trailing 12 months also abysmal. Financing cash flow happens to be positive. Now, why is this? Let's drill down and look at this. Okay, this is something having to do with how they're probably issuing more debt to try to keep themselves afloat. That's why this number is positive. So this looks like this happened first quarter 2023, but this lifeline is not gonna end up helping them out. It looks like end cash position continues to decline. You see, even though this is in the black, it continues to decline. And this is just the basics that I'm going over with you all. Capital expenditure, negative, 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 trailing 12 months, abysmal. There's that issuance of debt. Looks like that happened March 31st, 2023. And then this free cash flow, does this look good to you all? I'll give you a hint. The answer starts with an N and it's a two-letter word. It's a big fat no. So at the end of 22, we're here. Again, higher as far as, more in the red. 2023, quarter one, less slightly in the red. So here's some slightly good news. The free cash flow, while they're bleeding cash, the bleeding has been stymied a bit you see quarter over quarter, it does seem to be moving in the right direction, even though it's still negative. And you see this number here, negative. So this company does not look too promising. This does not look like a company that I would touch with a 10-foot pole or a 100-foot pole for that matter. So there's a candlestick chart there for you all that like technical analysis, but this video is more focused on fundamental analysis, obviously. Let's see what else we can do here. I'm going to go to one of my new favorite sites. You can search for a discounted cash flow analysis, and let's see what they come up with for Rivian. I'm sure it's going to show it overvalued still. Let's see. Rivian. Let me just Google this one. Oh, you all are going to like this one. My site called alphaspread.com. Wait till you all see this one. This is a first for me. I've never seen this. I'll let you all be surprised. Um, the fair value, I don't mean to laugh, but and not to be such a downer here, but the fair value of Rivian, according to this discounted cash flow site known as Alpha Spread, you all ready for this? The fair value is a negative number, which I don't even know how that's possible. Okay, so if we look here, the base case scenario for Rivian, it's fairly valued at minus $21.98. I don't think I've ever seen that before. Best case is still a negative number. This is pretty serious. The absolute worst case is $69, negative $69.12. This is something. I gotta say this is something. This is a company that might be on the path to bankruptcy. These are the assumptions that this makes. So you could turn this around here. So they're going to say in 5 years, obviously, and then here's the terminal revenue that they're suggesting. So this is what discounted cash flow analysis is. You're discounting future cash flows into the present. We got a long way to go. So this would have to survive quite a bit. This isn't a company I would see the government bailing out, although the government does tend to like EVs and stuff like that. And the government has put a lot of money into EVs over the last 3 years, but I don't see a company like this getting bailed out. This is pretty abysmal, folks, I have to say. How about that? A minus 21.98. Let's look just for fun. Let's look at what it says for Tesla. I know we've looked here again. I know this is actually lower than what some of us come up with when we do our own discounted cash flow analysis. So let's see what it says for Tesla. For Tesla, it's got it at $91.64 fair valuation. Okay, so this one probably undervalues some of these stocks, but anyway, as Mr. Sean so eloquently said here, what the statement analysis is showing us, that pretty much sums it up in 3 words. Rivian appears to be junk. Can't disagree. Let's see, SMCF, USCF are themes, ETFs that filter out positive cash flow and growth, small cap and large cap ETFs. Worth a check out after quality buy hold strategy. EV stocks are not meme worthy anymore. It's a gamble at best. Larry Yo says Tesla's the only viable American BEV company. BEV company, okay. Tesla's the GOAT. Yeah, for now, I have to agree. Rivian should focus on 1 or 2 products for the first 5 to 8 years. If they survive the first 5 to 8 years, it doesn't look too promising. Oh, that's true. Amazon does own largest shares of Rivian, so that might bode well for it. Anyway, I just wanted to do a video on Rivian and hopefully level set for some of you all that have been asking about it. It's not one that I would YOLO into, not one I would put my whole life savings into. Definitely not one I would be all in. So I report, you decide. Like, comment, and subscribe. Join Discord if you haven't already. We'll see you all very soon. Thanks so much. Take care. Have a great evening.